It's Wednesday night, so it's time to join me here on Wealthy You Wind Down. So let me just make sure I can come on in, come on in. I'm not starting yet. Let's see who's going to hang out with me tonight. We are streaming on Facebook in the Wealthy You community. We're streaming on YouTube, and I'm just excited you're here. So join me because I got a lot to talk about this evening. No, but hopefully you do too. So as you're coming in, let me know where you hail from so I can give you a shout out. Let me give my technology. There she is. Our goal getters are already in the house. Hey, Sharon. Good to see you. All right, Lynette's here as well. Welcome. Great question today, Lynette. I want to talk about that a little bit. I know many of you are joining Stash and are trying to figure out the lay of that land, so I thought we'd talk about that today. The topic for tonight was supposed to be, if we were kind of following the rules, was supposed to be spotlighting one of our Wealthy You goal getters, but because we missed Wealthy You Wind Down because of the launch of the Wealthy You Society for our new cohort, well, actually we put two together, so 2 and 3. I missed Wealthy You Wind Down. So tonight is about current events. So if there's anything that is a current event that you want to talk about, finances, because I don't do the politics thing, although let me just step back for a minute so I'm telling the truth. I will talk politics, but not on Wealthy You. Okay, so anyhow, my friends know I can go. Well, my husband especially, he has to tell me to calm down. But anyhow, come on in, ladies. I see all the Wealthy You Society women are here. We had a swinging Wealthy You financial vision party last night, so I want to talk about that a little bit. I love the fact that many of you are sharing your financial vision boards in the Wealthy You Society because that is really, as we talked about last night, when you make a public intention, you are more likely to hold yourself accountable, and also others hold you accountable to that as well. So come on in. Let's see, Deborah Brady from Memphis. Woo, one of our, what do I want to say? You're like a veteran Wealthy You alum. One of my first, well, not first, but certainly for wealth coaching. Let's see who else is in the house. As you come in, Angela Good, stocks. I mean, yes, you should invest, but stocks seem to be doing well. Should I put my money into stocks or somewhere else more stable? I mean, that's a good question, but if anybody asks me that question, well, I'll come back to that, Angela. That's a good question. So I'm going to come back to your question. So if you want to hear me answer the question, you better hang in with me. Let's see who else is here. Of course, my Wealthy You goal getter, rock star extraordinaire, Virginia Rutherford Hall. Welcome. Who else we've got? We've got Caroline from I got comments going everywhere. Let me catch up. Okay, Carolyn from Iowa. Okay, Iowa in the house. Okay. Oh, Valerie, you're from Memphis. So you and Deborah Brady are near one another. So you guys need to connect at some point. Who knows? We may have Wealthy You chapters. I know what is interesting and what we learned with our most recent group of Wealthy You goal getters is that many of you are kind of clustered in different areas like Florida and Chicago and California, Northern California, Southern California. Of course, the DMV was very well representative. That's the District of Columbia, Maryland, and Virginia for those of you who are not familiar. So, yeah, so I want to make sure that we connect because if we want to go far, we go together. Excellent. And of course, Anita Jenkins. Yeah, that's right. So, Anita's in Memphis, Valerie's in Memphis, and then I know Deb is in kind of Tennessee, or is it Mississippi, Deb? You'll have to let me know that, Deborah Brady. So anyway, come on in as you come in. I want to give you a shout out. Wealthy You Gold Getters, it's Wealthy You Wind Down. And for those of you who are joining us for perhaps the first time, I'm Deborah Owens, founder of Wealthy You, also known as America's Wealth Coach. And this is where we teach women how to build their first 5, 6, and 7-figure investment portfolios. And we have the track record to prove it. I always like to say that. Anywho, this is Wealthy You Wind Down. And so for those of you who are joining us this evening, did you guys see this fabulous little Wealthy You wine glass with silver and gold emblem? Well, guess what? They're going to be available, and I'll talk about that a little later. But tonight I am drinking, I went back to my standard Chardonnay. You know, you can't really lose with Chardonnay as the way I see it. But anyhow, so we're going to talk about current events. But before I get started, I thought tonight that I would give a shout out to all of our newest Wealthy You Society members. I want to applaud you. Man, you had kind of a fire hose thrown on you last week. You did orientation, and then you also went through my my presentation, and then what else did we do? Yeah, we did the financial vision board, and then you did your vision board party last night. So I'm excited. I was so moved by so many of the vision boards that you guys displayed last night. And you know what was really fun? It was really watching you guys talk about your visions and your dreams and your aspirations. And then what was really cool was just the shout outs that the other members, the affirmation that the other members really kind of lauded on everyone who stepped up. And then for those of you who did not get an opportunity to show your vision boards, if you want to make your intention known, get affirmation and accountability and support, please share them in the Wealthy You Society Facebook group. It's a private group, and we will support you and affirm you as well. So I got a question for you guys tonight. How many of you heard about Snowflake? Did any of y'all hear about Snowflake? Come on now, you guys, did you hear about Snowflake? Now, you would have to be under a rock not to have heard about Snowflake. Come on. Show me in the comments, did you guys hear about Snowflake? Okay, you're Olive Branch, Mississippi. That's right, Deb. Okay, so I'm gonna ask you guys a quiz. Hi, Calandra. What is an IPO? What is an IPO? Tell me. What is an IPO? So the Snowflake IPO came out today, and it was record breaking. Okay, so I wanted to, I really, I'm not on Zoom, so I can't do I would love to show you the anatomy of an IPO. I'll do that on another day. But anyhow, Snowflake is a cloud computing, data analytics, and security firm that was private and just went public. And when a company goes public, that means that they go out to raise capital in the capital markets, and they have a public offering, which gives people who buy shares in that company ownership in the company, right? So, like if you're buying Amazon or Netflix, or some of you have opened up stash accounts and you're buying different stocks, you could be buying fractional shares. You're buying stocks of companies who are already trading on the stock exchange. So when a company first comes to market to raise capital, and well, let me just step back for a minute, because I just feel like teaching tonight. I hope you guys don't mind, but I feel like sometimes you just jump into something and you haven't really given the context, right? So, like if a company needs money, there are, a few ways they can get it, right? They can go out and they can go to a bank and get a loan and say, hey, our sales are expanding. We need to expand. We need more money. So we're going to give us a loan. And then the bank gives them a loan with terms, just like we went and we would go out to get a loan, and a bank will look at its ability to pay, what its revenue is, its trajectory, blah, blah, blah. And then they loan us some money. So that's one way, right? Another way a company could get money is they can do like a promissory note, right? Or a bond. They say, hey, we're going to sign this IOU, and if you give us money, then in so many years or you'll get your money back. But during that time, we're going to pay you kind of interest, right? So like a CD that would pay you interest every 6 months. And then after that term was up, then you would get your money back. And the risk in that is, it's great, like, if you need the income, but you got to make sure that company is in a financial position so that it will be able to pay your money back. So that's one way, right? They can go to the capital markets that way and actually issue bonds, and people can buy them. But one of the most common ways that private companies who are on a fast growth pattern, are increasing market share, need capital, even though money's coming in, they need capital to expand. Or in some cases, the company is private. They've got fast growth, and the founders are looking at a way of cashing in. And so one of the ways they can do that is with an initial public offering, right? And with that initial public offering, it says, okay, we need, I don't know, I'm just going to use round numbers, and let's just say they need $100 million. They go out to the capital, they issue, so let's say in this case, they would have issued 1 million shares at $100. And in fact, that's exactly what this company did. Boom, Deb, you on fire tonight. No, but anyhow, I know I'm being silly. So they wanted to raise $120 million. So they issued 1 million shares at $120, and that would give them $120 million. That other 20, they probably wanted 100 million. That other 20 was really, everybody gets their cut. The investment bankers, the different mutual funds, the venture capital, who are like, man, we definitely want to get on the ground floor. We'll buy your IPOs. And so they wanted to raise, net would be about $100 million. So anybody who got into the initial public offering and was in the deal, they got their shares for $120 a share. Guess who was in that deal? Salesforce, their venture capital firm. Warren Buffett's Berkshire Hathaway, they got like 720,000 shares from one of the firms that was holding the paper when it was private, before it was coming public. Do you know that stock opened at $253? It doubled the amount that it was coming out at. Is that deep? But here's the deal and why the capital markets are not necessarily accessible or the playing field isn't level, because you still got to be a fat cat just to get in that IPO deal. So who's really in an IPO? So typically it's institutional investors like Bank of America Merrill. And if you're in the Wealthy Youth Society and you've been through the part of the curriculum where we go through how to research and analyze stocks and that sort of thing, when we look at analysts and we see who are the analysts that are following different stocks, many of those same companies with analysts are the same companies that are, in these deals. And so if you had gotten a little piece of the Snowflake deal, you would have doubled your money in one day. Isn't that something? And so, people always, for the, decades that I've been doing this, people have always asked me, why I'm so passionate about just average folk understanding the financial markets and how they work. This is why. You see what I'm saying? Like, if you're not at least in the game, I don't care if it's just you, starting out like the man in my nickel and dime your way to wealth with $50 a month. Where else could you go and have the potential of doubling your money in one day? Maybe the lottery. But, the point that I'm making is that certainly this is not like exceptional. I mean, it's not the rule, but it gives you the opportunity. And so when you're in a system that is built on capitalism, then you're either in or you're out. You guys agree or disagree with me? You guys understand where I'm coming from? And so that is why it's most important. So now I want to go back to Angela. So Angela Good, one of the first questions you asked me, stocks. I mean, yes, you should invest, but stocks don't seem to be doing well. Clearly, you are not watching the stock market. Yes, for the past couple of weeks, Angela, the stock market has been correcting and going down. But for the past, since it went, it's back at an all-time high. And this is why it's important for you to understand how the capital market's great. So Virginia says, I agree. Karen says, I agree 100%. Anita says, I agree. Kalandra says, yes, definitely agree. And Lynette says, I agree. Right? So I want you to understand, you got to understand the language of the market. You've got to learn the language of investing. You've got to understand the language of the markets and how they work. Because that really is how you build wealth. You cannot save your way to wealth. So what do I mean by that? Let me ask you another question. How much are you earning in your bank accounts? How much are you earning in your bank accounts? That's what I want to know. So somebody tell me, you got a savings account. What kind of interest are you earning on it? Anybody want to? I know you looked at that little statement that you got. I mean, someone last week was talking about their their granddaughter, I think it was saving for a house, and she had $37,000, and she was just disgusted about the rate of return that the woman was earning, the young woman was earning, and she asked, well, where else could she put it? But see, that's when I want to put it depends, right? Because that's right, Karen, you're earning 1% on a good day. And that typically is if you have a balance of about 10%. That's right, 0.1. That's right. And so, it's like the point that I want to make, and going back to Angela, is that if you're investing in stocks or the stock market or stock mutual funds, however you want to, it depends on the type of investment. If Calandra, if you're getting 2%, I want to know where you're getting that 2% at. But in some cases it might be that you're in a bond fund or something like that, but certainly not just in a regular savings account. So the point I'm making, I want to go back to Angela's question, and that is, should you invest in stocks? It depends. Listen, if you've got time, if you're not going to need that money in like 5 years or more, then you consider investing, right? If you need the money 5 years or less, then you're going to have to put in savings, right? So at the end of the day, the first question you want to answer is, what do I need? What is the goal for that money? Right? And then if the goal for the money is to have it appreciate and grow for a future need that's beyond that 5 to 7 years to 10-year time frame, then that allows you to decide if you can invest conservatively, moderately, or aggressive. Is that making sense to you guys? But I think the most important thing I want you to understand is, and what I've learned, is that even though you hear about IPOs and, I was talking about this IPO Snowflake and the fact that it doubled, in one day from the price that it was initially offered at. The truth is, probably the worst thing that could ever happen to you is that you get a windfall of money very suddenly or very quickly, or in a situation like this. Why do you guys think that is? Why do you think that the worst thing that could probably happen to you is you come into a huge windfall of money in a very short period of time? Anybody want to guess? Why is that the worst thing that could happen to you? In fact, I always think about Biggie, who said, more money, more problems. He's right. But in the comment section, tell me, why do I think that coming into a large sum of money in a very short period of time is the worst thing that happened to you? Anybody want to guess? Let me see if I can see your comments. Let me see. I'll wait for your comments. Because we lack financial investing knowledge. Yeah, that's one reason. But you know what, Karen? Even if you have it, it can be dangerous. Even if you already have it, it can be dangerous. Lisa says, that's good. You are not ready for the blessing, partly. Lynette says, most people will buy unnecessary things, and you have people coming out of the woodwork. Girl, you said a word there. Lynette, you said a word. Calandra says, if you don't have a plan for it, you could lose it very quickly, overspending. Absolutely. Caroline says most people have no plans or discipline with a large amount of money. True. Deborah, worst if you don't know how to invest. Absolutely. So, the truth is that I'm reading this fascinating book, and it talks about this man in 1929. 1929 was when the big stock market crash happened. And right before it, this guy, he was like a wizard. He was investing in everything. And then he got very aggressive and he could not lose. And then he woke up the next day, and they say he was like wandering down Wall Street. And before they had ticker tapes, and they would be tearing, and he was just sitting there tearing the tapes because he couldn't believe it. And he didn't come home, and his wife was distraught. His wife was distraught, and the next day they couldn't find him because he had taken his own life. And the thing is that the reason why like large sums of money at one time can be a curse instead of a blessing is because we didn't earn it. Things that you earn over time, you value more. Do you know what I mean? I just want you to get this is like, and that the real secret to wealth is compounding. It's not getting a large sum of anything over time. It's allowing each time for it to grow and grow and grow, right? Because then you have a sense of the impact and its growth, right? So like in the book Nickel and Dime, I talk about how the parking attendant had invested that $200 in IBM, and he never invested another dime. He just took the dividends and reinvested in more stock. And that dividends, that reinvestment of more stock, that, he ended up, that $200 became $40,000 over 20 years, right? Because he was just, rather than spending, he was investing in stock. And so that is the secret. And not only is it the secret, but it really gives you, life is what I've learned is that there is a balance in all things. And when you have balance, it can allow you to have, it can allow you to have perspective. I guess that's what I want to say. Perspective, right? So because you've experienced things going, you've seen the market go down and you stayed in it, and then you're accumulating these more shares at lower prices, and then you see the market go up, and then you see the value of your portfolio go up, and then you see the market go down, and then you see the value, you know what I mean? So that over time, when you can have that perspective, then you can, kind of deal with this, right? But if you get one, I'm going to tell you, so Sharon says, Miss Deb, I am retired, so is investing in stock not good? Should I just, no ma'am. Now you got to listen to me, Sharon, right? Like you have to grow your money, right? So any money that you're actually going to need to spend in 5 years shouldn't be in the market. But money that you don't need to spend in that 5 years, that other money you can allow to grow. So you're going to have different pots of money based on your needs. Sunny says, yes, it is a balance in all things. We don't need highs and lows. Well, yeah, but the fact is they're going to be high and lows. That's all I'm saying. Sunny, they're going to be high and lows. And the shift that you have to make it as an investor is it's really building the muscle to invest regardless of the ups and downs, right? Like when it almost to the point where when the market goes down, you're saying, okay, if you should have capital so that when the market goes down, you can you do have assets available to invest in those lower prices, right? So getting back to my point about this IPO, right? Like, that's the point, that the hype, right? Like, you see, like, I'm going to tell you, a lot of those employees who are going to end up with a windfall, they got to be really careful, because part of it, you begin to believe that, okay, if this happened this time, this can happen again. And then you start making decisions based on you cannot lose. And typically, going back to this same story, so the one guy was in the stock market crashes, loses his money, and then takes his own life, right? Then another guy, after the stock market crashes, when the stock market crashed, because he was betting against stocks, he came out of it and he made a whole lot of money off the stock market going down. So the other thing you need to understand is that ride the wave just like a surfer. Go ahead, Virginia. You're right? So a tale of two stories, right? Tale of two cities. So the one guy, he's in the stock market. He thinks he can't lose. He's speculating on all these stocks before the market crashed. The market crashes. He just can't believe it. He's living in New York, high life, living the life. Boom. All of a sudden, his money is worthless. He can't handle it, takes his life, right? So then comes another guy right at the same time. Market crashes. Rather than it ruining him, he's on the other side. He makes more money than anybody. Boom. Everybody else, it's the depression, him and his family. So the deal is, they know that he's investing. So he goes home, and his wife and the kids and her mother and father, they're like, oh my gosh, are we broke? And he's like, no, we're not broke. In fact, we're gonna be some of the wealthiest people ever. And so boom, they're like, stock market crashing, everybody in the depression, bread lines, they got more money than ever. So do you know what happened to that guy? The exact same thing. So he made that all that money off the other side of the market. So then he starts speculating, buying real estate. 10 years later, all his money is gone, right? So how could it be that one man speculates, loses everything, he takes his life, then the other guy, in spite of the fact that everybody was losing, he was winning, and then he continued to speculate. He loses his thing. They found him wandering. He takes his own life. Two of the same stories, right? Like, and so at the heart of that, what you begin to understand is that it's more than money, right? Because, and it's something I say in Wealthy You all the time, is that money is an idea at the end of the day. Your ability to create value for someone else, and they give you an exchange of goods, right? Like, they pay you for that. That's money. You guys follow me? So I guess my point is, money is not the answer to all problems. Now, the lack of it creates a lot of problems, but what's important is that you have the right perspective. Agree or disagree with me? I want to hear what you guys think about that. Because I think that is really the point of wealthy you. It's not to, you know, kind of romanticize that investing is going to be the answer to your problems, and, you know, everybody can make a lot of money real fast. No. Based on just the experiences that I've had as a financial advisor, you know, managing high net worth accounts, there are some really miserable people with a lot of money, and we see that even now, right? In our society, the people who have the most peace know how to manage whatever they have and take a little bit off the top and invest it. And if you do that consistently, then that really is the real secret to wealth. Because at the end of the day, wealth, what is it? Wealth is freedom, you know, the ability to live the life you want to live without worrying about your basic needs, right? Housing, food, clothing. And I think so. What this society has done has tried to make us feel as if the secret to you know, peace and a sense of purpose and ownership, that it's looking, wearing, feeling you know, a different way, and you know, that's what all the whole luxury sector, right? Like, you know, back in the day, you had like 0.01% of people who would ever imagine having a Rolls Royce, and now you could make $300,000 and you probably won't buy it, but you could lease it. Do you know what I'm saying? So this renting a lifestyle mindset, and, you know, kind of uh, rent to own, right? Rent to be wealthy is what has been thrust upon us. And as a result, we're building other people's empires, everybody else's empires other than our own. Agree or disagree? Excellent. So let's see. So Karen says, so true, perspective and purpose. That's right. Perspective is extremely important. Yeah, just one other point I want to make about, you know, getting a large windfall. Something else that I've seen, really, even with inherited wealth, like, you know, where people's parents, you know, work really hard, and, you know, maybe they accumulate some assets, and maybe they have you know, a considerable amount of money, and they leave it to their children. And man, if you aren't having conversations with your children along the way about how that money is being earned, and you know, the sacrifices being made, and, you know, how to invest that money, how you invested it, if you aren't actually teaching them about the journey that you've taken and the responsibility at that wealth, boom, most wealth is lost within like 2 generations. And why do you think that is? Why do you think that most wealth is lost within 2 generations? Anybody want to weigh in on that? Why do you think it is? Anybody? Come on, let me see your comments. Why do you think wealth is gone within 2 generations? Hang on, I'm trying to find your comments on my phone. Okay. No pain, no gain. There you go. They didn't earn it. That's right, Valerie. Poor management. Yes. And so, when people ask about, the passion I have around Wealthy You and the community, it really is, there is nothing more rewarding to me when I see what you're learning and I see you passing it on to your children. Because what that means, like the greatest gift you can give a child is not money, it's not things. I want you guys to get that the greatest thing that you could give your child is not money or things. You know what the greatest gift you could give your child? Anybody want to guess? And I was that's right, Lynette. They did not have a vested interest in how it was earned. That's right. What do you think the greatest gift you could give a child is? Knowledge. That's right. And their own sense of self-worth and the ability to feel empowered to make their way in the world. The greatest gift you can give your child is confidence, skills, and knowledge. And I believe that with all my heart. As a parent, you never get it all right. I think as a parent, esteem, that's right. That's right. A sense of value of themselves, and that the confidence to know that they can make their way in the world because they can add considerable value in and that they are deserving of it, right? Like that's what I mean about that confidence. I was almost as a parent to a fault. On the one hand, I feel like I was really, really tough on my kids, But then I say, no, you weren't tough enough. No, I'm just kidding. I'm just kidding. But I did. I mean, I had conversations with them that no, we're not buying you stuff. If you want stuff, you better go get a job, They were working from the time they were like, I want to say Brandon was 11. He was a soccer ref, and then Olivia started doing swim lessons, and he was like, when's she gonna get her job? When she got to college, the first thing he said was, when's Livy getting her job? But what I wanted them to understand is, like, the greatest feeling you can ever have is to not have to ask for anybody for anything, your mama, anybody. And I told them this story, like when I was, and I've been honest with you, I didn't come from wealth or anything. My mother worked in the factory for Chrysler, and my father was a sky cap for an airlines. And, I wanted this Dow. I must have been maybe 6 or 7. And I wanted this Dow, Chatty Cathy. And this Dow talked. And that's the Dow that I want, Chatty Cathy. Makes sense, right? So they were like, yeah, I go see Santa. I just want Chatty Cathy. So don't you know, that morning I woke up, it was a fake Chatty Cathy. Oh my God. It was a fake Chatty Cathy. I was so mad. I was so mad. I'm telling you, I remember that as if it were yesterday. And I said to myself, I said, you know what? I'm gonna be able to buy my own check. and, and I'm telling you, as soon as I could get a job, I want to say I was probably 11 years old. You know how back in the day they would have these summer jobs. And so I had, because I had been put up a grade, I was only 11 and you had to be 12. And I ended up with this job and I was working for the Detroit Historical Museum. And it was a wonderful job because I worked with the curator. And so it was like these old Detroit. And so you go in the basement and it was like historical, like a museum, just like you were back in the day. So it was a fun job. But it just taught me a lesson very early on. It's like, you know what, if you want what you want, you can get what you want if you work hard for it. And so that's just that's why I feel like that's what I wanted my kids to experience, right? Like if you work hard, you can do the things that you want to do. You can have the thing, and they had to put half of it in a mutual fund, right? So to go towards their college education, and that money came in handy because, of course, you know, there's never enough during college. And so you just, that's the greatest gift you can give your children, the ability to be enterprising, to be productive, and to know that they can make their way in the world. And so much of my conversation with my children it was just about, I'm not your friend. I'm not here to make your life easy. I love you. You got a roof over your head. Now deal with that and get on in life in the world. I mean, I didn't do that. When I was young, I had to walk 10 miles. I didn't do that. But I was like, listen, life is not easy. And I feel like far too many Black women in particular have tried to create this middle class nirvana for their children. And it's to their own detriment. And I believe that's why far too many kids are back at home with their parents. It's going to be very difficult for them to duplicate the kind of lifestyle that you created. But mind you, I said difficult. I didn't say they could not. So if they don't have any, that's the problem when they don't have any struggle. When they don't have any struggle, then when it gets hard, what do you think they do? If they haven't been through any struggle or had to fight to get something, to aspire to do something, what do you think they do? They crumble. They fall. And then what do? They come right back to your house and say, oh, it's so hard. Yeah, it's hard. So if they already fell and, didn't get that opportunity, had to work hard, had to do some things, had some setbacks. And when they come back from those setbacks, it makes them stronger. Just like it makes all of us stronger. So I don't know well, yeah, I got on that tangent because that is my point. Like, that's the greatest thing you can give to them. So, you're all learning how to create wealth, how to build portfolios, but this is about legacy so that so that our kids don't start where we had to start from. I don't know about y'all, but scratch, right? Like nada. Me and my husband, boy, we had to make it happen. And so if we're to leave a legacy to them, then the responsibility for us is to make sure they have the wherewithal, the knowledge, the skill to take it up that one more level. So that's what I wanted to chat about today. So if you're just joining us, I'm Deborah Owens. I am founder of Wealthy You. And hopefully you're in our Wealthy You community. If you have not joined, go to our private Facebook group on Wealthy You. Just answer a few questions. And every Wednesday night, it's Wealthy You Wind Down, where we have conversations like this. Let me just go to the comments. So Lynette says, I made my oldest daughter get a job at 15 years old, and she could spend some and save some. And with the savings she had to buy her school clothes, she took better care of them too. Isn't that something? Lynette, you hit that on the head, but I think you said it earlier in your earlier comment, and it is so true. And it was that, what was that comment, Lynette? You don't have a vested interest. That's the point that you made. That's right. That's why people got to have some skin in the game. They don't have skin in the game. They just simply do not value it. So, excellent. So, but before I go tonight, I wanted to share with you guys. So, you probably have seen something posted recently, but our next quarterly event is the Savvy Money Masterclass, and it is going to be awesome. We have got some great guest speakers with just phenomenal stories. We're going to have one of our speakers back because she was such a hit. So I want you to mark the date, October the 17th. So I want you to make sure that you invite your friends to come, because this is going to be a great and a fun. So it's from 10 to 4. We're even going to have a little after party. We're bringing our DJ back. We just talked to him today. He's on board. You're going to have an opportunity to, get your own Wealthy You wine glass. And it's going to be an amazing day, the way that it's shaping up. And, this master class, we're going to double click on what I believe is one of the main reasons that it is so difficult to have the funds to invest. And that is, strategically, ladies, you got to learn how to play chess and not checkers with your career. And so we're going to be double clicking on, how you can earn more and get paid what you're worth. So you're not going to want to miss this. So put that date, October the 17th, all day. We're going to be hanging. Of course, it's going to be virtual over Zoom, and you're going to be learning some new tactics and strategies, because that's what you do as a wealthy woman. In order for you to earn more, you got to learn more, and you have to, increase your ability to add values to others, because that's really the secret to building wealth. So excellent. So is there anything else? Let me just make sure. So yeah, October the 17th. Oh, for those of you who are in the Wealthy You Society, it is Q&A tomorrow night. If Tawana is on, I saw she was on a little earlier in the comments, but I think it's 8 o'clock for cohort, the cohort 2 and 3, and then it's 9 o'clock for our first founding cohort. But don't quote me on that. Make sure you look in the Wealthy You Society to know exactly what our Q&A is about tomorrow night. So, folks, that's going to do it for me. Thanks for tuning in with me for Wealthy You Wind Down. I'll see you here next week as well. So, Again, I'm Deborah Owens, founder and CEO of Wealthy You, where we teach Black women how to build 5, 6, and 7-figure investment portfolios. If you'd like to join in, you can join into our private Facebook group, the Wealthy You Community. Hope to see you there. Have a great evening, everyone, and good night.